Hi guys, I hope all of you are doing well. This is your Nifty guy. This might be one of the most important videos that I will ever be making for this particular channel. This is not related to any price movements for any particular day, but this is a series, the second lot of series that I had planned about the learning part of the learning as well as the psychological part of the markets, right? This video might be a little longer compared to my usual videos, so my suggestion and recommendation would be to stick around till the end. For me, nothing is planned for what is going to be in the video. I am doing impromptu and simply I'm speaking what is coming to my heart, right? In this video, I will be sharing the exact setups that I use, which has been proving profitable for me for the last couple of years. And just a disclaimer before we start the video, I am not SEBI registered. The views expressed here are my own and something which is coming in from my experience, something which is working for me, right? Trading as a business is something which can be different for different kind of people. It also depends on kind of your personality, the psyche that you have, and a lot of other factors, right? So do not take this as something which is going to work for you. Please do your own research, do your own back testing before application of any of this knowledge in your trading, right? So on that note, first I'll just start on the same concept of trading. So as I said, this is what I'm about to share with you guys is what I do in the markets right now. Uh, the whole idea of creating this channel came out of this particular thing was the way I used to analyze the video with me, and I used to share it with my friends and everyone. We used to discuss about what can be the next set of moves for Nifty, or what how can we trade in a better way, how can we be prepared for Nifty. And the way I used to analyze and take my trades, all my friends and relatives, they asked me that this is something you're doing something is good in it, and you can maybe create a YouTube channel and start making videos on it daily. And I thought it's a good idea. It also would serve as my personal trading journal, and that is the reason I came up with this particular channel around here. But honestly, trading or technical analysis is something which is very, very personalized, and it can mean the same set of charts, the same set of indicators can mean different things to different people. So I'm going to share is something which has eventually worked out for me. So I have been in the markets for a good 8+ years now, and I have tried a lot of things, right? I have tried option selling, I have tried futures, I have tried creating spreads. I have tried non-directional strategies. I have tried out everything, right? Option selling for me was going out to be very, very good. But then I realized something about myself and my personality, that is, I did not want to hold trades for long, right? And option selling requires you to do that in case to be able to get the advantage of the theta decay or the time value decay that is there. You needed to hold your trades, right? And I was doing scalping in option selling, right? And that is something which I thought in case if I try to shift it into option buying, maybe with the with a lesser risk involved, with a lesser capital involved, I can make a good difference to my trading style, and that helped me. So trading might be very, very subjective, and trading is actually very subjective for different people. So I advise discretion, consult your financial advisors, consult your own self. What is your personality? Are you a risk taker? Do you take risk quickly? Are you a risk averse person? Like I am a risk averse person. I do not take trades before I have a very good confirmation or a confluence of multiple events that are happening around that particular price point. So that is something which I am. I focus more on preserving my capital so that I have that capital available, so that I can take the advantage for the next particular trading day, right? So on that note, I'll just share what I do and how the system that I follow. I'll not be using any charts for today's session. All I'll be using is using some drawings to explain how I plan my trades and how I enter those trades, what are the price points that I look at, and what are the price patterns that I look at, right? So I have been a follower of technical analysis since a long time. I've tried out everything, be it moving averages, be it MACD, be it stochastic, Bollinger Band strategy. I've tried out everything. Some things will work some of the times, not all things will work all the time. So that is something which is there with the market. So there's no such holy grail that this is something that is going to work in all the conditions. But price is something behind which everything else is there, right? So price is the first thing which is there, and so I decided to just follow the price. And as an indicator, I only use RSI, and I'll make a separate video on how I use RSI as an indicator. For this video, I'll also remove the RSI panel from here because RSI is not being discussed in this particular video. So today, what I'll start with is again the market structure. So market can actually move in three ways, right? Market can move in a series of higher highs and higher lows. So when this is the market structure that the market is forming, the market is said to be in an uptrend. Opposite of it is market is moving at a lower high, lower low, and that is something in which the market is moving in a downtrend. The third can be when market is basically moving in a tight range, in a taking resistance from a particular level, taking support from a resistance level in a sideways zone without any clear structure. Right. So understanding the market structure is the first thing that needs to be very, very clear. And we have to do a top-down approach for this particular thing that we have to look at a higher time frame market structure first, because that is what the primary trend of the market is, right? And based on the higher time frame structure, we can mark our levels, we can mark our zones, and then we can look at what is being done in the markets currently, right? And we have to plan our trades accordingly. We have to shift our biases accordingly. Okay. So understanding of this particular market structure should be very, very key in case if you spend some time over the weekend, try to analyze the charts of Nifty on, or maybe the instrument that you trade on multiple time frames, on multiple different years, maybe go back a couple of years, and then you try to understand what is happening. So, how does the price structure, which is prevalent on the higher time frame, filter down to the lower time frame? How can you time and plan your entries, right? Uh, so once you are clearly aware of what the market structure is and you know which is your bias, and again, I always say you should not have any biases in the stock market because anything can happen in the market and you need to just be prepared for it, right? So market structure, an understanding of the market structure would also be can also be on an intraday basis. So on a 5 minutes time frame, also you can look at the market in case if it is forming a higher high, higher low, and you know, okay, the predominant trend is downward. So in case if I take a short entry, I will go in with my full quantities and I can be good at taking my or maybe slow in taking the profits. In case you have if you're taking a trade which is opposite to the trend, you can look at trailing your SL very, very tightly and taking quick profits as well. So the first and primary thing was the market structure. Now, second, the kind of trades that I take is I primarily take two type of trades. Okay, I'll just types of trades that I take in the market is number one is breakout and breakdown trades, and number two is reversal trades, right? So I believe there are only two types of trades that can that I take. Now there can be n number of trades. People can trade between support and resistances. People trade based on moving averages. People trade based on n number of things. So that is something that you have to define. I only trade breakout breakdowns and reversal trades. So how do I plan these trades is something which I will be speaking in depth in this video. So breakout and breakdown is something which is, say for example, this is a good enough resistance for the market. The market is coming here, spending some time around here, breaking out eventually. Now, many people would enter here. Some people would wait for a retest. They would enter here, but I enter around here. Once the market crosses this particular high, this is my entry zone. Similarly, in the case of a breakdown, say for example, this is a good support which is there in the market, market is slowly coming, it decides to break down below this. I will not trade this breakdown, I will not trade the retest, I will wait for the markets to go back below the pullback which was there. So this pullback which is there is of paramount importance to me. Now, I'll give you a very good reason for that. Most of the breakouts and breakdowns in the markets are fake. They might be an attempt to just capture some liquidity on top, and then again, market will go down in the bottom direction, or maybe reverse from there. So that is the reason I never trade breakouts and breakdowns without a proper pullback. Okay, I'll wait for them. Maybe I switch to a lower time frame to get the pullbacks, or let the pullbacks be visible for me, but I will definitely 100% times always wait for a breakout and breakdown. Now, the second rule for me while trading breakouts and breakdown is I will not trade every breakout and breakdown. Okay, pullback is important, as you guys have already known, and I will look for the breakouts or breakdowns at important locations. And if you talk about what are the important locations on a market, you guys can take a note of these things. These are very simple things. I try to keep my trading very, very simple. So previous day high is very important, one of the important locations. Then previous day low is important, and previous day's closing. So these are the three important locations which I always feel are important for trading breakouts and breakdowns. So I will not trade, say for example, uh, this is the daily candle. Say, for example, this is the daily candle, and this is the range of the daily candle, okay? And market is trading inside this, market is trading inside this. You look at this as an important resistance, and then market breaks out. I will not be trading this, taking this trade as a breakout trade, right? Because this is something which is the internal market structure that is forming. You can obviously create a biases and you can take a small scalping trade, but a proper breakout trade, I'll wait for the market to go above this particular high, which was the previous day's high. The market, let the market form a structure around here, give a breakout here, give a pullback, and then I'll trade this particular trade. So in case if you also look at the kind of series of videos that I have posted over the past month or so on the daily analysis of Nifty, you will see most of my trade ideas are around previous day highs or previous day's low. Previous day closing also does give some kind of support and resistance to certain level. That is why it's also an important price point or price location to look at. So the idea of trading breakouts and breakdowns should be very, very simple. You should not look at simply trading them at any random point. So not the price is moving up above a certain swing and that is something that you will take as a breakout. No, you have to look at these particular events happening at a very good or location which is there, right? So that is how I trade breakouts and breakdowns. So this is the first part of the video where I spoke about how do I trade breakouts and breakdowns and why pullbacks are extremely important. Okay. And the second type of trades that I take usually are the uh, reversal trades. Now, I'll just give you some simple basics. So today I took a very good reversal trade. I have already recorded the video. I'll upload it probably on Sunday so that you guys can have a look at it. And you will find out that today I made money in the call side, whereas market was predominantly negative, and that is how I took a reversal trade where I made some money. So let us simply check how I say, for example, market is continuously falling. You have identified that the market is falling. This is a structure where market is forming lower highs and lower lows, right? Now, to take a reversal trade, we need the structure to change. Okay. First and foremost thing is the structure need to change. Now, say for example, you see buying coming in from here. Will you say, for example, this is also an important support level. Okay. Price in the past might have taken multiple supports from here, and you feel that price can reverse from here. Same was the case for today. I'll quickly just a small glance into the chart for today. Okay, so this was a important support that we had drawn, and sorry, this is from the other video. This was the support that we had drawn. This was an initially resistance, and so if price has to reverse from here, how do we trade that particular reversal is something that I'm gonna discuss now. All right, so say for example, this is an important support from where price has previously taken support, and you expect markets to reverse from here. Now, will you buy the moment market comes around here? I will not buy. Will you buy once market starts showing some positivity around here? I will not buy. I will 100% wait for the market structure to change, right? I need this swing to be taken out, I need market, maybe even if not this particular swing, I need market to give me another fall down, give me a double bottom pattern with maybe a higher low, a lower low. That does not matter. We'll come down to that. There are multiple types of reversals which can be traded, but I need the structure to change. Okay. So for the structure to change, market has given us a higher low around here, and then market has crossed this particular high. Now the structure has changed for me. Okay. I might not even trade this W based on certain instances. I might trade it. I'll come down to it some in some other videos, but mostly I will wait for the entire structure to change. So if this was the structure, I will wait for the market to form a lower high, form a higher high, and then once market comes around here, that is something I'll enter around here. These levels is something that I will look at creating a long position. And if you watch today's video, or not today's video, but if you watch the analysis for Monday, the 28th of April, this is how I had taken the long trade in today's video. So this is how you trade the reversal, which is coming in from a positive reversal. So market is falling down. How do you trade a reversal? This can be supported by multiple factors, right? You can look at RSI divergences. You can look at the open interest data, the multiple things that can be used for confirmations. But the first and paramount thing for me is the price and the structure, and that needs to change for me, right? And the first pullbacks, usually, if people who enter here, maybe even if they are on the right side of the market, this particular selling off which comes with the first pullback can get your stop losses triggered and eventually leading to a small loss. And maybe again then you would not have the capacity or the capital to enter into the uh, correct trade or make the re-entry into the right trade. Okay, similar is the scenario for trading a reversal on the upside. So say for example market is moving in a higher high, higher low structure. I will wait for market to form a lower high, form a lower low, come up. And once market crosses this, this is the place where I will look at creating a short position or a reversal trade in case of a uh, uptrend. And this is how I will plan my reversal. Wait for now. This can be traded on an intraday basis. So what I always say is do not have any bias while trading the markets. You can see price action is something. If you follow the price, you will get those. Readings, that is called tape reading. You'll get those indications that what is happening in the market, what is going on with the buyers and sellers, who is in control, whose SLs are about to be triggered, right? So that is something which might be helpful to you guys. Now, there are certain rules. I'll just simply speak them out as it comes to my mind. So the number one rule for trading for me is be well prepared in advance, right? So that is why I plan my trades and then I trade that plan, right? That is something which is very, very important. If you're not planned, you simply wake up in the morning, you open the system, you are out there, you're trying to trade. There is a good chance you'll get trapped. But in case if you are prepared, you've already prepared, done the homework, done the research, you have drawn your levels, you have marked your supports, you have marked your Fibonacci levels and everything, you know things, and you will be much better prepared to handle the volatility of the market and to take those trades. Okay. Then the second thing is again, as I've already said, the market structure is paramount. The number one important thing is market structure. Train your eyes to look at the price in a market structure form of way. You might just look at candles, but you have to look at them in a price action. What is the market structure happening? What is the price doing around those levels, and how is it think the price or the market structure is the number one thing that you have to look at. Then the one more point that I always follow is wait for confirmation. Let the markets commit to you before you commit to the market, right? This is very, very important because a lot of times what you do is you take an aggressive trade much before the real entry has triggered, and that might just be a liquidity move from the market, or you not wait for that pullback. Uh, did not wait for the market structure to change. You just traded based on your gut, based on your hunch, and that is something that's going to trigger very, very badly for you. So that is something which I always say is something which everybody should be very, very careful about, and you should wait for the confirmation. I paid the price for it. You'll again get to see that in the video that will be uploaded on Sunday. I paid the price for it today, despite being profitable in the calls. I finally took some loss in the puts by being a little aggressive because I missed out on some trade in the morning, and that is how it works. So please wait for the confirmations, wait for confluence of events, right? Then another thing which I always say is, and also recorded a video in the earlier in learning series, the first video is about the stop loss. So before you enter a trade, you should know your SL. Say, for example, you are entering a short trade around this level. This is the breakdown level. You have waited for the pullback and you have entered short. You should know where is your logical SL, right? So this high in this case would be your logical SL. Even if the market starts reversing up and your SL has not triggered, there's no reason for you to panic and exit your trades. What people mostly do is they keep looking at their profit and loss, and once the position starts to come into loss, what they will do is they will quickly book an SL कि नहीं मेरा loss हो रहा है, SL ले लेते हैं. Whereas what you will see in most scenarios, market will come up again, fall down, not actually triggering the stop loss, but you would have actually taken a stop loss. Okay, so that is something which I always say. Stop loss is something wherein your view goes wrong, right? So every trade should have a view, why, or a reasoning why have you entered that particular trade, and the stop loss should be at a logical point where you know that okay, my view has been proven wrong around here, and it's best to get out of the markets right now when we look at a fresh new trading opportunity. Because say for example you are on the wrong train, the further away it is you go from the in the wrong train, the more expensive is the ride for coming back to the original station, right? And of course that this saying is not about the trains. So in case if you are in the wrong trade and you keep sitting in the trade in hope, in anticipation, your losses will be so big that you will need a much bigger trade or a much bigger profit, much bigger ROI to just equate or negate that particular trade, the loss that you had taken, right? So that is something, the SL should always be logical. It should not be मुझे लग रहा है यहाँ पे, नहीं, intuition नहीं, monetary wise nahi. It should be on the charts and you should know it well before entering those trades. So if you are entering a reversal trade, say for example, market structure has reversed, you have entered here, your logical SL is here. The markets might again come down because the market will move in waves. It will not go once you have entered, it will not shoot कि नहीं आपने trade ले लिया है तो it has to go all the way up. No, it will come back again, play with your sentiments, play with your emotions, and that is something that you need to control. So knowing your SL and keeping your SL at a logical place is something which is very, very important. And I give a lot of emphasis and a lot of importance on the same. Okay. Then another general rule which I do trade, I don't trade around between after 2:45 p.m. So I try to wind up my trading much before that. And in case of any fresh entries which are coming up, as per even if as per my system, if I'm not too convinced, I will avoid those particular trades. And another is I try to avoid any breakout or breakdown trades between 11 to 12, because that is something where market is mostly sideways, and sometimes yes there will be trending moves during that period, but most of the time I'm talking about in general, and trading is all about probability. So most probable chances are that in case if you trade breakouts and breakdowns, you can trade reversals definitely during that particular time period 11 to 12, but if you don't take breakouts or breakdowns between that particular period, you might get your stop losses triggered and take a SL. Right. So that is something that I follow. It all depends upon your research and thing. And another thing is I take maximum two stop losses per day. So in case if my day is bad, despite doing everything right, or I am doing some mistakes, I take the first two trades that I take, both of them are SLs. Does not depend on the quantum of SL or the amount of monetary loss. I set my system. There is no further trading on that particular day, because if you do trade that day, you will do revenge trading. You will try to cover up that losses, and trust me, you will end up with much more loss than eventually that you had suffered in those two trades. So shut down your system after two SLs. That is the rule that I've kept for myself. You can also keep it as one trade a day or one SL a day, and that is something that will help you preserve your capital in the long run. In case if you are looking at markets with a very on a serious note and looking at making a business out of this, making a life out of it, making a career out of it, please, that is something that you need to define for yourself. What I have done is I have taken two stop losses for the day. I am out of the market for that particular day. I will come back on the next day with a fresh mind, and the next day I come out with a fresh mind is something which I will not focus on the losses for the previous day. I will look at the fresh day as a fresh day. My thoughts will not have the logic that okay, I had done this particular loss yesterday and this is something that I need to recover in today's trading. No, that is something which is wrong mentality, and you will eventually lead to over trading or maybe taking more losses. And follow the price. cut the noise. There's a lot of noise if you put on a lot of indicators on your chart. So different indicators will give you different signals. Some might say sell, some might say buy, some might say hold. But again, that is something that is the reason I have cleared out all majority of the indicators. I do have a small set of indicators that I check from time to time. CPR is something which I look for. Then inside bar alert is definitely there on my that helps me find out consolidation areas or maybe finding out halt candles for in trend continuation trades. Bollinger Bands I do look out for some volatility squeeze which is there. So and moving average ribbon I look at on when I do my weekend analysis. So ribbon is something which I have. I'll just show the settings. I have a simple moving average 20, 50, and 200 on them. 200 is obviously the long term trend which is there, and 20 and 50 are the short term trends which are there. And I don't trade based on them, but yeah, I do my analysis when once I do that over the weekend, I do it over the using these particular moving averages and everything. And obviously, RSI is there. Apart from these, there are no indicators that I use. I have trust me, I have tried all of them, not all of them. There are the multitude of indicators out there in the market. There are a lot of concepts out there in the market, smart money concepts, Bollinger Band-based tradings, and everything. But I follow the price, and that is something that has worked for me very, very well. Scalping trades have worked for me very, very well because I did not want to sit into a trade for a very longer period of time. I didn't want to hold my trades overnight, and that is why I shifted from option selling to option buying, despite having a big capital. Now I have divided that particular capital into multiple trades, or basically I do not buy with the entire capital. I only allocate a certain 30% odd in one particular trade, and based on that particular option premium price which might be there, decide on the quantities that I enter with. So that is something which you need to keep your in check. So that is a risk parameter for me. I use that to keep my risk in check. I do not go out with complete full quantities. Even if I'm 100% convinced, I'll just use 30 to 40% of my capital, maybe 50% if the trade is very, very good, but not 100% of capital, right? So these are the certain basic things that I do, and around which my trades are based. I have tried to share it with you guys. There were some messages which were coming in asking me about a, a detailed explanation about how to trade breakouts and breakdowns and how do I trade. I thought I'll make two different videos about breakouts and breakdowns and for reversal, but then I thought no, the idea is very, very simple. See, if you have been following me, I keep my trade ideas very, very simple, and even my trades are very, very simple. Okay, so I'll that is how I plan. And so I thought, so because the idea is same, I'll just explain it to them in this particular video. And then I'll do a separate video where I'll do some homework. Initially, I'll mark out some breakout and breakdown trades or reversal trades that I have taken in the past on the charts. And then I'll show you examples on the charts of these particular trades. Okay. So yeah, that's it for today from this particular video. In case if you like the setup that I use or the way I have explained the video, or the trades that I take, or the logic that I use, or the rules that I have laid out for myself, uh, please like the video, put down anything that you might have to say in the comments box. In case if you're new here, please subscribe to the channel, share it with your trading friends. There's a lot more planned and coming up in the coming weeks. And that's it from my side for today. This is me, your Nifty guy, signing off. Thank you so much.